able to understand the topic in a better manner. So I would like to know what is that you have learned till now and why we have to study accounts under the GST. Fine. So I'm starting with the way I would like to proceed with the topic. GST, as you said, it is the goods and service tax, which is treated as an indirect tax. If it is an indirect tax, the tax supposed to be payable. So whoever may be, like the purchaser or the supplier or the dealer, whatever the name called, or a customer, when he is purchasing some commodity or is taking some services, so he has to pay the tax which is already included in the price which is being stated either on the MRP of goods or the services rendered. So that amount which is supposed to be payable by the customer to the government, but is not paying directly to the government, indirectly, that is the supplier or a dealer, whoever is dealing with us, they will pay the amount on our behalf. So what have to do, he may be a manufacturer, he may be a dealer, he may be a supplier, he may be anyone, a service provider. So he may be anyone. So what he will do is he has to maintain the books. So when he is maintaining the books, first of all, what he has to do, he has to record the sales. So you might have heard about accounting of sale or account sales supposed to be maintained by a dealer or a trader or a consignment person. So who is handling that consignment is supposed to maintain the record that whatever the goods he was selling, he has to maintain that record. So that automatically what happens is he has to have an invoice to be prepared. In that invoice, he has to show what is the price which is charged, what are the transactions which are being taken place during every day in his business supposed to be entered. So that means what are the books he has to maintain? First, if he is a manufacturer or a producer, he has to maintain the record relating to a production or a manufacturing of the goods, inward outward supply of the goods, stock of the goods, input tax credit availed that register to be maintained, output tax payable should be maintained, any other particulars deemed necessary supposed to be maintained. If goods or services either may be imported or exported, relating to those data, he has to be maintained. Reverse charge documents, he has to be maintained. Tax invoice, bill of supply, delivery challans, credit notes, debit notes, receipt vouchers, payment vouchers, refund vouchers, or e-way bills. All these are supposed to be maintained. Names and addresses of the suppliers, because to whom the goods are being supplied, or the goods who are the customers also, those list, those names, those addresses are also need to be maintained. A complete address of the premises where the goods are stored. That means they may have a godown, they may have a factory, they may have something else where the goods are being stored. So those data is also need to be maintained. Apart from all this, they also need to, in addition to this records, they also need to maintain the opening balance, the receipt, the supply, the goods stolen, or the goods lost or destroyed or written off or disposed of or way of gift, whatever may be. Either they may distributing the goods as a free sample, or probably, like let us say, buy one get one free. That means they are purchasing one, we are giving one more extra. So those records are also supposed to be maintained. Now if you go to anywhere like ashadam sale, the people, what they are doing, they are giving a strategies, they are developing a strategy stating that The person, if they purchase one saree, they'll get one saree is being given at free of cost. So in such cases also they have to maintain those records. See, because those sales, whatever they are being made, they are giving in the form of a discount or a gift or a coupon or a lucky draw or whatever it may be, but the cost is also need to be recorded, because all that need to be valued properly. Based on that, a GST is supposed to be payable. So that's the reason why all that's supposed to be maintained a record. The next, they have to see to it that what is the balance of stock regarding raw materials, finished goods, scrap, wastage, etc. All that also they are supposed to be maintained. And here one more thing which we have to take into the account is how long these records supposed to be maintained. They say that it is at least for 72 months. 72 months is nothing but every year we have 12 months. That means a 6 years period. These are the records supposed to be maintained from the due date of furnishing the annual return. So this return supposed to be submitted, because based on that return only the GST is calculated and payable to the authority. So in such cases, now what are the things to be taken into the account? That means a list of ledgers which supposed to be maintained here is input CGST account, input SGST account, input IGST account. That means whatever the inputs which we have, which we have a dual GST. Dual GST here is we have, because of federal state which we have under the India, we cannot have a uniformity in levying the GST. That's the reason why we are taking GST in dual form. That is, one is central GST, state GST, and in between the states, whatever maybe the transactions are taking place, neither it comes under the central nor it comes under the state. So directly it enters into IGST, that is integrated goods and service tax. So these are the records supposed to be maintained. Apart from this, a provisional ITC, that is input tax credit relating to a provisional CGST or IGST or SGST account supposed to be maintained. Electronic credit ledgers are also need to be maintained. Cash ledgers, credit ledgers are to be maintained. The next, coming to the duties and taxes, the output CGST, output SGST and output IGST records are to be maintained. GST on advance accounts, electronic liability ledger relating to SGST, IGST and CGST supposed to be maintained. Now coming to the sundry creditors, they are supposed to maintain a registered, unregistered and a composition records. Now inward supply purchases, if we take into the account, then purchases B2B, that is business to business account, exempt purchases regarding to the business to business account, expenses to business account, purchases to business to customers account, exempted purchases to business to customers account, expenses business to customers account, and reverse charge mechanism account relating to the expenses, and unregistered dealers account relating to the expenses. All this are supposed to be maintained in regard to the inward supply. Now coming to the outward supply, local B2B sales account, local B2C sales account. B2B is business to business. B2C is business to customers. Interstate business to business. Interstate business to customers sales account. Export sales account. Exempt sales account. Interstate, local and the interstate accounts supposed to be maintained. Reverse charge mechanism sales account need to be maintained. In case now Amazon, Flipkart, etc., if you take into the account, they are supposed to be maintained e-commerce sales account. So these are the accounts supposed to be maintained. Now coming to the, as you know, what for the sales returns will be maintained? what for the purchases account to be maintained, what are the purchase returns are being maintained, purchases from unregistered dealer, and the composition of dealer export and import. These are also need to be maintained by either a producer or a manufacturer or a dealer or a supplier. All these are supposed to be maintained. Now coming to the uh, first, let us discuss about the purchases from composition dealer. Who is a composition dealer? That means a dealer who is registered under or mentioned under the composition scheme. Then what is composition scheme? That you should know. Because in fifth semester, you might have learned what is composition scheme. So it is an option which is given to the dealer in case he don't want to maintain what all has been stated under the GST Act. Probably he may pay a lump sum amount which is a minimum amount supposed to be payable to get rid of all such complications. In such cases he can be registered or he can opt under the composition scheme. So here any dealer who is registered under the composition scheme, he may be called as a composition dealer. Now what are the conditions to be applied for the opting of composition scheme? First, any assessee who only deals in supply of goods can opt for a scheme, meaning that the provision is not applicable for the service providers. This is only for the goods. It is not for the service providers. Now, like let us say a restaurant we have. The restaurant, you think that they are providing the goods or they are providing the service? They are providing the service. In such cases, the restaurant services should be excluded relating to the composition dealer. Now, in case like interstate supply of goods, if you take into the account, here you have to consider only the businesses which are having only intra-state supply of goods are eligible instead of the supply of goods that is interstate. Interstate is between the two states, whatever may be the supply was taken place, that is not considered under the composition dealer, provided they are not eligible to register under the composition dealer. But who are eligible? That means intra-state. What is intra? That means within the state. Whatever may be the supply of goods are being taken place, those dealers are eligible to opt under the composition scheme. Now coming to the dealer who is supplying the goods from electronic commerce, that you know, Flipkart, Amazon, we have so many other like Snapdeal, etc., etc. you have. So in such cases, what about those people, whether they can opt under the composition scheme? These people, they cannot opt under the composition scheme. That is, the e-commerce platforms, whatever may be, it can be Amazon, it can be a Flipkart, it can be a Snapdeal, it can be Meesho, or whatever may be the options we have. Those dealers cannot opt under the composition scheme because they belong to e-commerce or electronic commerce operators. So electronic commerce operators cannot exercise the composition scheme. The next coming to the businesses which have a verticals with the same. That is, like let us say you have a footwear, a franchise of a bakery or a textile, a sale of a textile, sale of a footwear, franchise of a bakery, etc. Here, the composition scheme will be available to all three business verticals. So that is the reason why they say that a taxable person will not have the option to select composition scheme for anyone because they have to, that all verticals are supposed to be taken care of. That's the reason why in between one cannot opt for the payment of taxes, another one cannot opt for the composition of taxes. If one is opting, automatically the others also need to opt. That's the reason why the who are eligible, who are not eligible under the composition scheme, that is also need to be taken care. The next, the dealers are not allowed to collect composition tax from the recipient of the suppliers, because neither they can allow input tax credit, nor they can able to whatever the amount is refunded can be sent to them. That's the reason why those dealers are not eligible to claim composition scheme. The next, any other persons who are not eligible under the composition scheme, first of all, the tax liability shall be the tax plus interest or the penalty, which need to be calculated. Based on that, they are not eligible. Now, the persons who cannot opt for the composition scheme also we have to take into the account. As I told you, whatever the supply of service other than the restaurant owners serving food, alcohol, etc., they cannot claim composition scheme. Supplier of non-taxable goods, that means the goods which does not come under the tax purview, those people cannot opt for composition scheme. The next, if the person is engaged in the interstate supply of goods, that means between the two states, whatever may be the supply was taking place, supply of goods is being taking place, in such cases that person cannot eligible to claim as composition scheme. The next year, they always say that e-commerce operators are also not eligible to collect the tax at source. So even those people cannot opt for composition scheme. Now, supply of tobacco, pan masala, ice cream, even these people cannot claim composition tax. Now, the rates are also being mentioned under the composition scheme. For a manufacturer, they say that 0.5%, 0.5% for CGST, 0.5% for SGST. That means total put together 1% on their turnover, either on the state or union territory, can be applied. The next, for the supplier supplying the food other than the alcoholic liquor for a human consumption, in such cases, the rate of tax which is charged under the CGST or SGST is 2.5%. That means it is 5% of turnover. For further other supplier, if you take into the account, it is again 1%, that is 5% of CGST. 1% means 0.5% on CGST and 5.5% on SGST. Total it is 1%, need to be calculated. The now next we have to take into the account the people who are not issuing an invoice, they are supposed to issue a bill of supply. So you should be able to know the difference between the tax invoice and bill of supply, and who is able to provides the bill of supply. Now, bill of supply is the same what are the details which are mentioned in the tax invoice. More or less all that information is there. Only the tax related need not to be mentioned, because, and this will be given only for those people who cannot issue the tax invoice. So the bill of supply is to be maintained. The next, here, the dealer or a producer or a registered person, he has to exhibit the net profit, the tax liability of a composition dealer. He has to give all the details relating to the transactions which are being taken place. So, what is the tax invoice? What is the value which is being paid on the normal taxpayer as a registered person, or registered under the composition dealer? He has to give all those details, the GST charged on them, what are the purchases, what are the input purchases, what are the total purchases, what is the taxable value, what is the input tax credit can be availed. All those particulars need to be stated in their invoice. The next, they also need to state about the profit and the tax liability comparison. Also, they have to take into the account. The next, here, they also need to write the journal entries for the purchase from the composition dealer. Like, let us say any person, like any industry, or you can call it as a Sriram Industries in Telangana procures housekeeping goods from a composition dealer in Telangana. Like, this is an example which I'm giving you. In that case, what he has to do, expenses, B2B account should be debited with whatever it can be a 5,000 or 10,000, whatever the amount which they are purchasing, and to whom it has been purchased, from whom they have purchased, like, because these are the housekeeping goods. So some such solutions, or some any solutions relating to the housekeeping related purposes, so that they have to mention the name of the person who is supplying such goods. So, and the amount also, as you know, the journal entry, usually the way we will be writing it, like expenses account that are to so and so company, you have to write down that entry. So this is how a purchases which are being made from a composition dealer need to be mentioned. And in case, like, let us input tax credit should not be mentioned, because usually on imports, that is components or the raw materials on which uh, input tax credit cannot be stated. Then further, whatever may be, like raw materials you have purchased, and next for the finished goods, the same raw materials, if it has been used, there you can claim the input tax credit, but not on the raw materials which you are charging. That's the reason why input tax credit cannot be claimed on such goods. Now, coming to the next, we have accounting under the reverse charge mechanism. So what is reverse charge mechanism? Now, usually what happens, the government, the business, and the customer, these are the three areas. So what the business person will do, business person will pay the taxes to the government. But what he will do, he will not pay from his pocket. Rather, he will deliver the goods or the services to the customer, and customer has to pay the amount on whatever the services he has obtained from this businessman, or probably the goods. So what he will do is, he'll collect the fee for the services which are rendered plus GST from the customer. Whatever he has collected from the customer, the same thing will be returned to the government as in the form of taxes. So this is usually will be done. So here, now coming to the reverse charge. Under the reverse charge mechanism, what we are doing here is, the businessman will deliver the service, okay, and he will collect only the price. But the customer, what he has to do, he has to first of all prepare an invoice, a self invoice he has to prepare, and he has to attain what is the GST, and that GST is supposed to be paid to the government directly. This is actually called as a reverse charge in a mechanism in which the supplier himself pays the GST on the transactions to the government by the method of self-invoicing. So this is actually called as a reverse charge in GST. So now, the levy and collections of taxes, if you take into the account, so definitely here what we have to do is, who is applicable, all that we have to take into the account. So under the CGST Act 2017, under the Rule 46, here every invoice has to mention whether the tax in respect of that supply is payable on reverse charge. That you have to mention on the invoice. The next, maintenance of accounts by a registered person to be maintained. So what all the required records need to be maintained by the supplier, attracting the payment of tax, etc. on that. The next, what he says is, What is the reverse charge liability? Cannot be discharged by using input tax credit. So that is also need to be taken care. The next, invoice level information in respect of all supplies attracting the reverse charge rate wise are to be furnished separately in the table 4B of the return. That is CG, that is goods and service tax return 1. In that we have to mention all these details. The next, advance paid for reverse charge. Supplies are also available for CGST. Now coming to the next topic which we are supposed to discuss about the purchases from unregistered dealer. Now unregistered dealer, if you take into the account, that means the dealer who is not registered under the GST. He will be called as unregistered dealer. Now whatever the purchases which are made from a registered dealer, automatically what happens, the supplier will collect the taxes, and whatever he has collected he will remit to the government. But unregistered dealer, here what happens is we are making the purchases from an unregistered dealer. Unregistered dealer means he is not under the purview of the act. That means he himself has not registered under the act. So the GST authorities does not know from whom you are purchasing the goods. You may be a registered, but you are getting the goods from an unregistered dealer. So it's a reason why here what happens is unregistered dealer are taxable on the reverse charge basis. So first of all, they comes under the reverse charge. So as I told you, what is reverse charge? So whatever the goods which are purchased from unregistered dealer or seller and not the supplier, they all are charged under the reverse charge mechanism. Now, coming to this, like what are the services of several unregistered dealers? Like let us say supplier of consumables, stationery, housekeeping, chai samosa to the staff during the office hours, repairs, maintenance, service of electrician, carpenter, etc. If you take all these services, you can say these are the services from unregistered dealers. Okay. So now here, what we have to take into the account, what are the provisions which can be applied so that they can see the conditions also need to be met. The first one is whatever the supply of goods or services. So that means there should be a supply of goods or a services. Next, whatever may be the supply was taken place, that supply should be in respect of taxable goods or services. You're supplying the goods which are taxable goods or services. Supply must be by an unregistered dealer, maybe or a registered dealer. They can be both. Unregistered dealer also. Unregistered dealer is supplying to a registered person. That is also may happen. The next, supply must be an intrastate supply as compulsory registration is required for interstate sales. That means any sale which is taking place between the two states, those dealers or the suppliers or the producers or the manufacturers are supposed to be registered under the GST Act. Compulsorily they have to register. If you are dealing with the goods between the two states, if you are doing a business within the same state, you may not come under the compulsory registration. So here compulsory registration is required in case of interstate sale. Now, whatever may be, like purchases up to 5,000 per day from unregistered supplier will not attract GST. That means the small suppliers, those people never ever comes under the purview of GST. Why they said that it is 5,000 per day? 5,000 per day. That means their turnover is less than specified by the act. Usually they say no, the 20 lakhs turnover or a 10 lakhs turnover. If it is there, regarding to the dealer, then they have to be registered compulsorily under the GST Act. But in any other case, because for the livelihood, the people who are doing and their uh, most likely their turnover may not be more than 20 lakhs in such cases, or the 10 lakhs in specified cases. In such cases, they need not registered, and they are they will not attract GST under the purview of GST Act. The next here, uh, we have a case study. Let us see. Sri Rama Industries is a registered company which has spent 7,500 on purchases from unregistered dealer. Should it pay GST or reverse charge mechanism? What do you say about this? Here, a registered company is purchasing the goods from unregistered dealer. So in such cases, you tell me whether these people supposed to pay GST or a reverse charge mechanism. That means here two people are involved, registered dealer and unregistered dealer, right? So registered dealer is purchasing the goods from unregistered dealer. So what they have to do? They have to pay GST or they have to charge under reverse charge mechanism. Can anyone answer this question? Are you listening? Are you understanding the lesson? Hello? Okay. So here he will charge under the reverse charge mechanism because registered dealer and unregistered dealer both are involved. And now, like let us say, what are the journal entries supposed to be written for the inward supply with RCM, that is reverse charge mechanism? Like whatever the goods which are purchased from an unregistered person. So here purchases account that are to creditors account. This is what the journal entry is supposed to be written. And in case of reverse charge mechanism, any liability at the end of the day, they're supposed to write input CGST account that are input SGST account that are to output CGST account and input SGST account creditor, that you have to take into the account. The next, coming to the exports. Now, export means we are exporting the goods from our country to any other country. Why are we doing? Usually, India will encourage such exports. They will encourage the small manufacturers who are producing the goods which has a demand in the international market. They will see to it that they have to encourage such exports. So we will send these goods to the international market, and we can able to get more foreign exchange into the country. And when more of income we are getting into the government, into the India, automatically those amounts can be utilized for the welfare of the country. That's the reason why the government will always support or encourage such kind of exports. So here usually we will name this exports under the zero rated supply, or it may be taken either the goods supply of goods or the services which are being developer by special economic zone. So who are called as a special economic zone? These are geographically bound zone within India where the economy laws relating to export and import are more liberal as compared to other parts of the country. They have specified certain areas where those areas to be called as a special economic zone. So for them, the taxes are being waived off, or they will see to it that for a period of time, they may give 1 year, 2 year, or 3 year, depending upon a zone where the special economic zone is being notified by the government. Based on that, the taxes will not be levied relating to those suppliers who are being situated under this special economic zone, which is notified by the government. That's the reason why here either the export goods also may not, because mostly they'll come under the zero rated sales or the zero rated supply. Special economic zone also, or the unit comes under the zero rated supply. Now, coming to the options for the exporters which they have. Usually, a registered person making a zero rated supply may claim a refund as per the section 54 of CGST Act. The two options are available for the exporter. The first option is export under bond or letter of undertaking. That means, see, whenever they are selling the goods to outside the country, first, see, in the central excise, whenever the goods are being manufactured, once the goods are manufactured, they are supposed to pay central excise duty. Because now central excise is totally eliminated and it is a part and parcel of the GST. So GST is levied. So what is central excise? Here, a manufacturer changing the raw material into the finished goods. So a conversion has been taken place. Raw material is something, the finished goods is something, and in between the state, it is a conversion process has been taken place. Once the form, the name, anything if it is changed from the original raw material to the finished commodity, in such cases, the duty is levied. Duty on manufacturing of the product, earlier it comes under the central excise. So now it comes under the GST. So those goods, because it is manufactured, they are supposed to pay the tax, but when the tax will be payable at the time of clearance of the goods from the factory gate. So goods are manufactured lying in the factory, but the tax will be paid on such goods only when those goods are removing from the factory gate. That means you are either handing over to the seller, or you are handing over to the person who requires this, or to the state, or to the country. So as soon as the goods are removing from the factory gate, there is a need that you have to pay the tax. So here the exporter, what he will do is he want to avoid the payment of all these kinds of taxes. Like manufacturing, on manufacturing tax supposed to be payable, goods which are moving from one municipality to another municipality, like octroi duty earlier we used to charge. So octroi duty, excise duty, the sales tax, etc., etc. There are so many taxes will be involved. So all those taxes can be exempted. Why? Because these goods are exported from our country to any other country. So when we want to avail that exemption, what we have to do first, we have to execute a bond to the government stating that these goods are manufactured only for the sake of export. That is what you are giving an undertaking saying that we have manufactured the goods and we are sending for the export. If you are proved, then government will allow you that exemption. If you are unable to prove it and you are giving a wrong letter undertaking, in such cases, you have manufactured but not supplying the goods to the outside country, not for the sake of export, may be sold within the state or within the country. In such cases, you are liable to pay the taxes. So that's the reason why here export under bond. First, you have to execute a bond. Bond here means maybe a security or a deposit need to be executed with the government. That is equivalent to the payment of taxes relating to such goods. Once you have executed a bond and you have sent these goods to the outside the country for the sake of export, when you prove it, that bond, whatever you have executed, can be released. Or you have to give a letter of undertaking stating that without payment of tax, goods should be allowed to remove or clear from the factory and it is to be sent to the for the base of export. So either of these two things need to be made and it is an agreement between the government and the manufacturer stating that the goods which are being manufactured is sent for the export. This is one. Second instances, if you have to take into the account, payment. You have to pay the amount. Integrated IGST you have to pay because goods are moving from our country to any other country. In such cases, it comes under the IGST. So what they have to do is first they have to pay all these taxes, remove the goods, export the goods to other countries, then prove yourself that the goods are is exported and claim the refund. So either you have to pay the taxes to the government and clear the goods or afterwards you can claim the refund. So either of these two supposed to be considered under the exports. Now coming to the imports. Imports is we are importing the goods from outside. Usually the government will never encourage such kind of goods to be imported. But there are certain cases where we cannot avoid also. There are certain goods we have which supposed to be imported. Like earlier, the mobile phones we are manufacturing right now in the India, but earlier it was being imported from other countries. So whatever the parts or whatever may be assembled pieces, etc. Even now also we have certain mobile phones, brands, etc. We are importing from other countries because the taste and the preferences of the consumer automatically such kinds of goods supposed to be supplied to the customer. In such cases, those goods are supposed to be imported. Now here, what you have to do is the GST is supposed to be payable on such goods where the goods are reaching. The destination you have to take into the account. Based on that destination, the goods are taxable. So, exports comes under the zero rated, but imports never come under the zero rated. Imports, goods or services, may be interstate supplies or IGST may be levied. Now, under Article 269A, constitutionally mandates that the supply of goods or services or both in course of import into the territory of India shall be deemed to be supply of goods or the services or both in the course of interstate trade or commerce. So here, whatever the importer of services which are being rendered are liable to pay the GST. And very much whether they are paying under the reverse charge or they may have to pay under the GST. That is because registered dealer, unregistered dealer, that is also will be considered, will be taken into the account. So those also need to be considered, and based on that, either reverse charge mechanism can be used, or normal payment of taxes are supposed to be taken into the account. The next, here, one thing you have to take into the account, import export code of the business need to be mentioned, which is a mandatory. So the businesses which are doing import and exports, for them, a mandatory is that they have to mention import export code. That means those people are being given a code so that they are eligible. They are allowed to do either an import or an export of the goods. The next, a PAN itself is an authorized to act as import and export code. So they can take their PAN as a authorized to state it is a import export code. Now import of goods, mostly they will levy the basic customs duty. So import of goods comes under the customs duty. So under the Customs Act, whatever the levies which are being stated relating to the import, the tariff act you have to take, customs tariff act. Based on the tariff act, whatever the goods which are being imported, they are supposed to be levied. And this IGST is also levied. So they can be a luxurious goods. So what are the GST compensation cess which is to be levied on Goods and Service Tax Act, Cess Act 2017, that need to be taken care. Next, you have to take the value to be computed under IGST. What is the assessable value plus basic customs duties supposed to be leviable? What are the other duties are also leviable relating to the goods which are being imported? And sometimes whatever the imported goods which are liable for anti-dumping duty or a safeguard duty, natural calamities duty, like this, there are so many other kinds of duties are also there under the Customs Act. Whenever we are dealing under the Customs Act, we will discuss relating to all these kinds of duties. And the cess, compensation cess, all these are also included in your value. So they always say assessable value, basic customs duty, educational cess, value for integrated tax at so and so rate, value for the composition cess, then what are the duties? All duties will be added, and they will come to know what is the total amount which is payable in the form of taxes that will be stated there. So 100% export oriented units or special economic zone under which the goods are being imported comes as per the Customs Act. So the customs duties and compositions cess will be either levied or exempted based on the transactions which are being taken place. Whether transactions are exempted or not need to be considered relating to this. So hope you might have understood relating to the topic which we are supposed to be discussed today, relating to the accounting and the GST. So sales returns, purchases, purchase returns, purchase from unregistered dealer, composition of dealer, export, import, all that we have discussed, even accounting under reverse charge. So whatever the advance payments and receipts which the dealer has been received, based on that he has to make a record and need to be maintain the cash or the credit ledgers into the account. So all these are required. That means the first two units we have discussed in this class. Tomorrow we will discuss relating to the value or the valuation under the GST. Hope you have understood. Do you have any doubts to be cleared? Hello? Do you have any doubts? No doubts. Okay. We will continue in tomorrow's class. Shall I leave? Thank you.